we have been able to wipe out hundreds of thousands of dollars for individuals. I had a client that overpaid $25,000 in taxes, and had she come to me 1 year ago, I could have gone back to her prior year return and amended that return and gotten her that money that she overpaid. How can tax strategy help you keep more of your money? Well, one, you need to understand that taxes are your number one expense. You will spend more money in your lifetime on taxes than you will on food, clothing, housing, and transportation combined, or at least the average American will. So 40% of every dollar we make goes to pay taxes, essentially. So how do we free that up? Well, it has to come from strategy. It's not preparing your tax return, right? So I was not taught in college how to save people money in taxes. I wasn't even really taught in college how to prepare a tax return. We did a couple by hand, but that was pretty much it. I more along the lines of was taught to do data entry, right? To create financials. And so the benefit of having a home-based business or a business, it allows you to be able to take advantage of the second tax system that was created to provide wealth for you, as opposed to steal wealth away. And you may say, well, why in the world is a W-2 employee was that created to steal wealth away? Well, someone has to pay the taxes, right? So as business owners, we make money, right? We push that money back into the economy by buying more things, which are tax deductible for us. And then the goal is that we will eventually hire more employees, and those employees will then pay the lion's share of taxes. And if we had to pay the same taxes as employees did, we would not be able to hire the employees, hence the reason why Congress decided to give us massive tax benefits so that we would continue hiring more and more employees. So if you understand that, then you have to be in the system that was created to provide wealth for you, which is the business owner tax system. And you have to focus on strategy, because 93% of business owners still overpay in taxes. And the reason why they overpay is I typically see three things. They overpay because of lack of knowledge. One, they are not writing off the expenses that they're entitled to take. So that's a huge deal. Two, the structures, they're not set up properly as far as their structure. So, they may just be a sole proprietorship or a partnership. And what I see is that they should typically be an LLC treated as an S corporation for tax purposes. And three, the other big reason why business owners overpay in taxes is they're paying themselves way too much in a paycheck. And that's eliminating what's called the QBI deduction, or decreasing the QBI deduction, and also increasing their amount of money that they're paying themselves in a paycheck. So if you're not totally focused on strategy throughout the year, then you are going to overpay in taxes, because you cannot do strategy typically in 2026 for 2025, right? You have to be in 2025 in order to make decisions in 2025 that will affect the 2025 tax return. If you wait until 2026 when it's time to prepare your return, then it's going to be very hard for you to get the strategies, unless you're just missing deductions, and we need to go and track those deductions. So those tax strategy should be our number one goal, because that's going to be the way that we free up the most amount of money throughout the year. And by having a business, then you're going to drastically benefit from the tax savings of that business, as well as, eventually the whole goal is not necessarily that you leave your W-2 job, but that you have the ability to do that if you want to do so. So the cost of not having a strategy session, I have actually, just yesterday, I had a client that overpaid $25,000 in taxes, and had she come to me 1 year ago, I could have gone back to her prior year return. It was actually a return that was done 4 years ago, and I could have gone back and amended that return and gotten her that money that she overpaid. See, there's something called the statute of limitations, and what that says is that you can amend a tax return. So we can actually go back, amend returns for you, get money back for you, if it has not been over 3 years from the date of filing or 2 years from the date of paying. So what that means is that right now, if it's 2025, we can go back and look at 22, 23, and 24 and amend those tax returns for you and get you back money, hopefully, or decrease the amount of money that you would owe. On top of that, it also decreases penalties and interest if you owe money. The other statute says that it's 2 years from the date of paying. So if you owed on 2020, let's say, we actually could go back to 2020, amend that tax return if there were missing expenses, and we could amend that for you and get either money back if you've already started paying in and you don't owe as much, or we can decrease that tax liability. And we have been able to wipe out hundreds of thousands of dollars for individuals. Like just one individual, we went back and amended, got them back $330,000 that they overpaid in 3 years. I actually had someone else that was the highest that I've ever done, $338,000 that she overpaid. I've had people, $50,000, $60,000, $70,000 a year that they'd overpaid. I've literally had clients go back and tell us that, hey, I used the money that you amended and got us back 3 years of money, and I used that to pay off my house. I've also had people use that money to put a down payment on their house. So, it's life-changing to be able to go back and help these people get money that they didn't even know really existed. And that's the best part about what I do here at OTB Tax, is to be able to look and say, hey, we can go back and not only save you money moving forward, but this is what we can do for you going backwards. So the difference between a tax strategist and a tax preparer is, one, a tax preparer, their job is to take your information and prepare your return based upon the information that's provided. You may have a tax preparer that may look at it and say, well, hey, last year you had this. What about this expense? It seems to be missing this year. But for the most part, a tax preparer, their job is not to prepare your tax return and then tell you what's missing, or tell you that you should do this, this, and this as far as strategy goes. A tax strategist's job is to actually look at the return, look at the information that's been provided, and say, okay, this is what's missing, and this is what you should have done in order to save money in taxes. Now, some of those strategies we can actually implement current year. If it's 2026 right now and that we're looking at the 2025 tax return, sometimes we can make adjustments for that, but the majority of those things has to be done during the tax year that you're dealing with, so that you could either spend money, we can change structure, we can implement strategies, and that requires a good set of books. So if you don't have a set of books that you can provide to us to say, hey, here's where I'm at net income wise, it's very hard for us to strategize. But the strategist's job is to free up money. A tax preparer's job is just to prepare your tax return. So there is a huge difference, and it's worth finding a strategist that is going to align with you to help you free up more of your hard-earned money, because it is the number one expense that we have in our lifetime is going to be taxes. So how can realtors audit proof their deductions? One of the biggest ways is just keeping track of expenses. So a lot of people believe that an Excel spreadsheet is good enough. One, I will tell you that it is not. So the only audits that we've ever lost has been clients that have not kept a set of books. You are required, if you are writing off expenses, to have a set of books. Now, they don't go out and tell you that as far as the IRS goes, but you should be able to generate a P&L, a balance sheet, and a general ledger. And it's very hard to do that outside an accounting software. We suggest 2 different softwares. One is Hurdler, another one is QuickBooks. It just depends on how big your company is to which one you use. Hurdler is obviously for small businesses. When you get to a point where you're making over $250,000 a year, I think that QuickBooks is probably going to be your best bet. But you do need some sort of software. And one, it saves a ton of time. So the software will pull in bank statements and credit card statements for you. They'll virtually do 75% of the accounting work for you if you will get in and actually start setting that up. But it's very important to have an accounting software that you can say, here's my tax return. We can back that tax return up with a P&L, a balance sheet, and a general ledger, which a general ledger is nothing more than a detailed version of a P&L and a balance sheet. And if you don't know what a P&L is, that's a profit and loss statement. That's what we use to prepare your tax return. So the profit and loss is your income minus your expenses, and what's left over is your net income. That's what you pay taxes on. So the IRS wants to see, and the states, right, the Department of Revenues, they want to see that your tax return matches a P&L. Well, if you don't have a P&L, if you just have an Excel spreadsheet, it makes it harder for the auditor to do their job. So therefore, they're going to try to penalize you as much as possible and demand that you give them as many receipts as you possibly have. If you have a P&L, a balance sheet, and a general ledger, and then you can back that up to bank statements, then you're less likely to have to provide as many receipts. So, if you're not great at tracking receipts, I would definitely suggest that you get a bookkeeping software and start tracking that. Whether you hire us to do that work or whether you do it yourself or hire someone else, it is very imperative that you utilize that for audit protection. The other thing as far as audit protection that we do in our firm is we actually include audit protection with every single tax return. It's not that we can't handle audits, but we actually find that it's easier to allow a firm that specializes in that. They have nothing but CPAs and EAs that only handle audits, and so we actually pay per tax return to have that audit protection for you up to $1 million. And so it also covers, if we mess up. And I mean, obviously we're not perfect. We prepare 2,500 tax returns a year. We do that really, really quickly. So I'm not saying we're always going to be perfect. And so that audit protection covers that. So I really love having that outset. We also will get involved if we need to, but the hope is that they will handle that. So just making sure you have a good software that you're tracking your expenses in, making sure you have as many receipts as possible. That's a great option. And then also making sure you have and keep your bank statements and your credit card statements. And you'll need to keep those for at least 3 years. If the IRS can go back 3 years and look at auditing you. And if they find that you misrepresented your income more than 25%, they can actually go back 6 years, but that typically is not the case. So make sure that you're keeping your bank statements, you are setting up as much as you can into an accounting software, and you're reconciling that every month or having someone else do that, like OTB Tax, and then making sure, on the back end that you're keeping as many receipts as possible so that you are covered if you get audited. So tax strategy is extremely essential for commission-based businesses, and the reason why is because there's not as many expenses, I guess, that would be included. So if you are working and you're just earning commission, say you're working from home, you may not be utilizing your vehicle all the time for business purposes. You may be using your cell phone and your internet, and obviously business use of home can be deducted, but there may be little expenses other than that, like software and things like that you just don't deal with, where the company that you're working for and earning that commission from may be reimbursing you and paying for that. So that's why it's very imperative, if you are making more than $12,000 a year in net income after expenses, that you have an LLC that's set up as an S corp election for tax purposes, so that we can bypass as much self-employment taxes as possible. What I see is that people literally can wipe out half of their tax bill by just changing their structure. So it's very important for you to have the right structure in place, to make sure that you're tracking as many expenses as humanly possible so that you can keep more of your hard-earned money.